Systems work, people fit. Welcome to InsureMark's Advisor Mentorship Podcast with Vice President Jeremy Hauser.
Welcome back to this week's episode of the Advisor Mentorship Podcast. I'm your host, Jeremy Hauser, excited to bring this conversation to each and one of the listeners as we continue to take a deep dive into entrepreneurial advisors, a lot into the annuity space. We talk a lot about best practices, growing, building, scaling businesses, and very excited about our next guest here is none other than Grant Kvalheim, who is the CEO of Athene Holding. He joined the team back in January of 2011 as CFO and later served as president, a role he held until just last year, July 2025. Welcome to the show, and thanks for doing this, Grant.
Glad to be here. Thanks, Jeremy.
And, I got a couple questions that we'll be diving into here, but as we're recording here in July, so you're 12 months in as the CEO. You've worn a couple hats already, just in the company itself. Just the last 12 months. So what are you most proud of in just the last year?
In my previous role as president, I was doing a lot of, I was kind of running the insurance company aspect of it. Jim Belardi, our co-founder, I joined to work for him, was focused on the asset management side of the business. I think what I'm most proud of is some of the additions we've made to strengthen the team, the fact that we haven't skipped a beat, and we continue to perform extremely well. And so hitting on all cylinders. I think I'd say the continuity and just thinking about what's next and how we continue to keep this thing going. You mentioned I joined Athene in January of 2011. I was the 10th employee. Company was a peanut.
Jeez.
I mean, we had like 600 million in assets and maybe a couple of $100 million in capital. We weren't making any money because we were investing to scale up the business. And to now be part of something that's over 400 billion in assets, as you know, we're the largest seller of annuities.
Mm-hmm.
I'm not saying that happened because of me. I'm saying I've been part of a great team, and it's been the best part of my professional experience. But I'm just pleased with the culture that we have, the progress that we're making, and we talk about plans and financial metrics and whatnot. But at the end of the day, it's about, are we helping people live the retirement of their dreams? And we always keep that in mind.
That's incredible. 400 billion in assets. And you're absolutely right. So I've seen Athene top of the charts here. The exact number, but at least 6 out of the last 7, if not 100% of the time, you guys are usually the top dogs in the annuity world itself, especially fixed index annuities. But on your 15 years back, you actually were also co-president, I believe, of Barclays. So you've had a lot of executive roles in your career. So as we talk on the show a lot to entrepreneurs and most importantly, just business owners building and scaling their business itself. So what in your background, what helps shape your leadership style for Athene?
I all think we all learn from our experiences without a question. I've been fortunate to work at some very strong companies for some very strong leaders. And I observed, and there's some things about the way they led that I liked, and maybe some others that I said, hey, if I had a chance, I might do it a bit differently. Mm-hmm. And then most recently, you mentioned I was at Barclays. I had no insurance background whatsoever when I joined Athene. And so that's been a tremendous learning experience. And you have to be willing to ask a lot of dumb questions and do a lot of research and to learn a lot. Again, I joined when we were pretty small and have been able to learn along the way. But I think for me, what's critically important about success is building a trusting environment. It starts by you as a leader being a trustworthy person, and then extending trust to other people, having respect for your colleagues. But if you operate in an environment of trust, things are pretty easy, right? I'm not just talking about inside Athene, the relationships that we have with distributors, the relationships that we have with our policyholders. If it's a trusting environment, I think things happen a lot easier. And if it's not, stuff gets really hard really quickly, right? And so to me, that key thread of leadership is I want Athene to be seen as a trusted partner and a trusted employer. And I want myself individually to be seen as a trusted partner.
Well, not to, I mean, trust is such a key word, especially when you're dealing with, I mean, the solutions of what the products you all distribute is, I mean, retirement. So like, I mean, it's not just today, it's the future for people that are looking at companies like Athene. So what do you think, like, how is Athene, especially when it comes to meeting the needs of current clients and also future retirees, how are y'all positioning yourselves to separate from the market itself?
I think there's a few things there. Look, I think we have a suite of great products that deliver real consumer value. We want to match that with incredible service. And we've invested a lot of money in systems to make sure that that's the case.
Mhm.
We need to work with great distribution partners like yourselves. When you think about where we are in the United States today, 12,000 people a day, almost 12,000 people a day retiring. And they're not adequately prepared. I mean, all kinds of surveys show that people are not feeling secure about what lies ahead. In a recent survey, more people said they were afraid of running out of money in retirement than they were afraid of dying. You think about that. And I think that when you think about what our industry brings to bear in that equation, we have the products that insure against longevity, that offer the potential for lifetime income. And I think a lot of focus with the growth of 401ks, and a lot of focus has been on accumulating wealth for retirement, which is of course important. But I think now the conversation is also becoming fuller in thinking about, okay, how do I turn at least a portion of that accumulated wealth into guaranteed lifetime income? And I think we're leading the way. You mentioned our focus on fixed indexed annuities. We're growing in the RILA space a lot this year. So giving options to policyholders about how they not only accumulate, but then get a lifetime paycheck. A lot of people used to have it. People maybe my generation and a bit older had it through a defined benefit pension plan. But most people starting out in the workforce today are never going to have that. And they have to plan for their own retirement, and they have to secure their own longevity protection. And I think that's what's great about our industry. We are the industry that offers that to Americans.
When it comes to retirement, people put their dreams in your hands. And with the right strategies and financial products, their dreams can become more than they ever imagined. We are Athene, and we are driven to create annuities that give you and your clients the freedom to do more. Let's make retirement remarkable.
You know what? It's funny because literally just this morning we were doing a mastermind call with some of the advisors that we work with, and one of our top guys, he points to a specific article. I think it was LIMRA. Don't quote me on it. I think it was a LIMRA article where the number was around 69% of Gen Xers would love an annuity just based off the concept of longevity, getting the opportunity to have a guaranteed stream of income they can outlive. And I think that's spot on of what you're saying. It's just the lack of pensions nowadays, or just trusting, where is that next check going to come when I'm retired? So it's interesting you say that, because as people start to evolve in their careers and you start dipping down to the younger generations as well too, not many homes for guaranteed income. And I mean, so if we go back 15 years of being at Athene itself, and now for going back to Keith Pinkley, who used to, I literally came through our doorstep back in Insuremark here in Houston,
Yep.
About 15 some odd years ago.
Yeah, he's been here from pretty much the beginning.
He's rise through the rankings. Mitch Anderson, who's amazing, who works with us today. So the path of 10 employees for you, and now literally known as I would say the gorilla in the room for the fixed index annuity space. So what made Athene the top carrier?
I think we've got a number of attributes that when you put them all together, Jeremy, just make us a very difficult competitor.
Mm-hmm.
It starts with our relationship with Apollo. Apollo was always a strategic partner of ours. And then in January 1st, 2022, we merged with them. Apollo as our asset manager, Apollo as our capital raiser in the early days before we were a public company, it's been fantastic. So on the asset side, our view is they give us 30 to 40 basis points of incremental yield without incremental risk. So just higher return per unit of risk. And that's not to say we're buying risky assets. 97% of Athene's available for sale securities are NAIC 1s and 2s, so investment grade. We think we've been pretty good at constructing liabilities policies that make sense for policyholders, and having a suite of products, MYGAs, fixed indexed annuities, RILAs, SPIAs. We've been a leader in the bespoke indices within FIAs, and those bespoke indices that actually perform. We now have one of those indices with north of 20 billion in that particular index.
Mm-hmm.
We are the lowest cost operator. We think we operate with 30 to 40 basis points less in overhead than our peers. Why is that important? We can put more money into the consumer value proposition and still earn an adequate return for our shareholders. And it's not just about having a low cost operator. We don't have any legacy systems. We operate on one admin platform, just a competitive advantage. Great service. It's not just low cost, it's great service. We have more capital than the people we compete against. Athene has now 36 billion of statutory capital.
Yeah.
Only a few of the mutual insurance companies have more capital than Athene. We think we have great people. We not so humbly say we think we have better people than others, but we have a long service. You just named some of the people that you've been dealing with over a long period of time.
Yep.
We have a team that's been together for a long period of time. Every one of them is as passionate as Mitch and Keith and me. And then lastly, I think we built great distribution, not only in the independent channel, but in banks and broker dealers. And I think that collection of attributes has made us a force for good in the annuity industry.
So it is incredible kind of to watch from the sidelines, but also be a part of it, just watching the journey of Athene continuing to grow. I mean, to this day, I still remember Keith walking into our office saying, this is going to be our goal. This is where we want to be. We're going to be the number one distributor. And everybody's like, who in the world is Athene? So it goes back to, as just now in your shoes, right? As a CEO, how important was like vision?
Yeah.
I mean, to actually lay out and know where you're going as your North Star to run the company now that you're there. So now, I mean, you helped build it, but now how do you sustain it? How do you stay there?
I think vision is everything. We have this tagline, driven to do more. And that's an ambitious tagline. And we didn't have a marketing department when we came up with that. That was Jim Belardi, the co-founder, and myself. And we were joking around and just saying, hey, why don't we just say Athene? We're in a hurry. We didn't think that had the right marketing element. So what about, driven to do more? I think it's important to have clarity of purpose, real ambition as to where you're going. Then you need to, come up with the goals that get you there. Then you have to have the discipline to work at those goals every single day. But I think what's, to me, amazing about Athene is we have been far more successful than we ever imagined. And yet, I'll give you some evidence of that, Jeremy. Before we were acquired by Apollo in the fall of 2021, we had an investor day because this was a much bigger deal for their investors. They were used to a balance sheet light kind of business where they were earning asset management fees, and pretty much everything they made every quarter, they paid out in dividends. And with the acquisition of Athene, they were acquiring this big balance sheet. They went to a fixed dividend. And they really had to explain that to their investors. So in the fall of 21, we publicly set out a 5-year plan. And we said that, by the end of that 5-year plan, we expect to be making $3 billion of pre-tax income a year. We did it in 2 years, in 2023. So in the fall of 24, we had a reboot on the new 5-year plan, which is to say we would expect to be making pre-tax income of $5 billion in 2029. But I think the important thing is that no one has become like self-satisfied. Oh, we did what we came here to do. Let's all, sail off into the sunset. When you achieve your lofty goals, then you just recalibrate and set a new loftier goal. And I think so long as your organization behaves in that fashion and everyone kind of rows in the same direction, you can achieve great things. And I think that's been the secret sauce of Athene, if you will. High ambition, really competitive people. When we say we're going to be in a business, we play to win. I think that gets everybody up in the morning rather than just saying, oh, we're going to have a Me Too product. It's like, no, we want to have the best product in the marketplace.
Yeah, I go back to I watched from the audience. It was you and our CEO Bruce Donaldson, a couple other CEOs chatting at one of the meetings that we were at, and and all smart guys on the stage. But I got to say, and that's when I reached out to Mitch. I was like, after hearing you speak and how you talked about the industry, your experience prior, and where this idea of Athene and industry is going, it was just one of those where enlightening moments of like, oh, we're nowhere near where we're actually going, although the industry's doubled in the last, call it 3-4 years itself. And so one of the things that, as I start to get to know you a little bit more and watching you on social media, and by the way, anybody out there, you're a great follow on LinkedIn. I mean, you
Appreciate that. Thank you.
share some incredible context of what's going on out there, I guess the outside experience you have, bring it into the insurance front and talking about certain topics that usually aren't noticed, I guess, or maybe on the level of scale of what people are willing to talk about in a seat like yours. One of those topics, and that's what I really wanted to talk about today, was you lean into a lot on private credit. So having private credit in the industry and then just educating people around private credit for our space. So what role does private credit actually have in the industry today?
I think it has an important role. Maybe I could take a step back because I'm not sure everybody means the same thing when they say private credit.
Mm-hmm.
We believe it's a $40 trillion marketplace, and that 38 of the 40 trillion is investment grade. And that what gets all the headlines is the 2 trillion, the direct lending, the non-investment grade direct lending, features prominently in the portfolios of BDCs. BDCs have been getting a lot of press and not much of it great. But I think there's a lot of conflation and attempt to read across to say, oh, that's a form of private credit. And what insurance companies are doing is private credit. So are any of the same issues? And the answer is absolutely not. The insurance industry invests almost exclusively in investment grade private credit. And why is that important? I mean, for starters, if you think about how capital markets have evolved over the last several decades, the number of publicly listed companies is about a third of what it was 2 decades ago. And you now have close to 85% of all the companies in the US that have 100 million in revenue or more are private. And people used to aspire to becoming a public company because if you were a public company, you could raise capital, equity, and or debt more easily. But with the evolution of private markets, both for equity that is private and debt that is private, you're no longer compelled to go public. So there is diversification elements around being in the private credit space that is just a good credit positive for an overall portfolio. But if I bring it down now to Athene, about 20% of our portfolio is private credit. And that's similar. If you look at the disclosures that companies have been making, that's similar. 94% of it is investment grade. These are the best assets that Athene has. This is the best of Apollo's bespoke origination capabilities. They come in the form of structured ABS deals, but where the underlying corporate name is an investment grade corporation like Intel or Sony or Air France. And they can be structured as just straight private corporate deals, but they offer 150 to 200 basis points over what those same names issue in the public bond markets. So why would they do that? Well, they do that because they can borrow in scale. It was announced that Apollo just closed a Broadcom deal last week, the largest private financing ever done, $35 billion in one shot. you may have seen, Jeremy, that Intel announced that it was prepaying a private credit deal it had done with Apollo. That deal was $11.1 billion. They prepaid it after 2 years. That was a pretty big position for Athene. We owned roughly $5 billion of it, but we booked a $673 million gain on the prepayment. So it's important for our industry because we need safe yield. We need investment grade yield that offers more yield than just buying public bonds or public asset backs or CLOs. And in reasonable amounts, and we think 20% is a reasonable amount, it gives you that extra yield and allows us to be more competitive in our annuity products.
When it comes to retirement, your clients rely on your vision to create one-of-a-kind plans that can bring retirement dreams to life. We are Athene, and we are relentless in crafting annuities that help provide the growth and confidence your clients expect, along with the service and support that you need. Let's put Athene annuities to work. Let's make retirement remarkable.
Congrats, by the way. So pretty large deals that were done here just the last couple of weeks. I know for, and the fact that you just rattle off these numbers is incredible. So for the industry though, right? So I don't know, for, like I said, going back to sitting in the crowd, listening to people way smarter than I speaking on stage. It was almost a little much, but you just know the vision of where the groups are going and the insurance companies themselves, where they're seeing the puck go. And transparency though. So the fact that you can rattle off these numbers, how important is it for all companies, and like, what does transparency look like for Grant and then maybe for the industry as well when it comes to these numbers?
I spoke recently at a conference that was organized by the Bermuda Monetary Authority, and I said, I'm for radical transparency, and I am for radical transparency, because I think some people throw rocks at our industry, and sort of hide behind, gee, we don't know what's on the balance sheet. And the way to diffuse that is to be very forthcoming about, what's on both sides of the balance sheet. But I'm sure you've seen, we recently published 3 decks on various aspects of Athene, a total about 180 pages. We've always had a reputation for leading the industry in transparency, because as a relative newcomer, a lot of people were saying they're doing this or they're doing that, and it'll all come to naught. And we just think the more that people know about our business, the more comfortable they'll be. In the entire history of Athene, our credit ratings have only gone one way, up. And we're now A1 from Moody's, A+ from each of S&P and Fitch, and A+ from AM Best. And in each of those companies' capital models, we have AA or better capital. So we think the more people know about Athene, the better. We think we have, in several ways, set the standards for transparency. When Silicon Valley Bank went under and everyone was saying, oh, gee, could there be a run on an insurance company? It never made any sense. But at that point, we started disclosing a year forward our lapse assumptions, quarter by quarter. And we've been doing that. Every quarter, we report what actually happens versus what we've been forecasting. And people have seen now for years, gee, what they said is true. They have a very good idea about what's coming due in any given quarter. And it's highly predictable. So we think that those kind of, when issues come up and people say, gee, we want to know more, when there was a lot of concern about software recently and what's going to happen to all the software companies in the face of AI, we said we've got direct exposure of 0.4% to software. And that 80% of it is to the kind of names you'd recognize, right? Oracle and the like. So we think disclosure just nips in the bud, if you will, speculation that people may have about your business.
And leading the way there, right? And a couple companies will start, I think more will start to follow, because if you guys continue to grow at the pace that you're growing, I mean, last year, I want to say y'all did about 36 or so billion of annuities just in 2025.
We did. And I know that's most important to your listeners, but we also run reinsurance, funding agreements, PRT. In total, we originated over 82 billion of new liabilities last year. But your number on the annuity space is exactly right.
Okay, so 82 billion. So, and being outwardly out in front of everything, being transparent about where the assets are, and the fact that you're actually willing to put out the forecasting and the real results of this is what we predicted, this is where we are. Very smart. That's good CEO management, I would say.
We try.
So, what is strategic growth though? So, I mean, incredible growth in the last several years now, especially last year, probably was a record breaking year. So, what does strategic growth from the CEO look like moving forward?
We make very long-term promises to policyholders. So they need to be highly confident that Athene is going to be here 2, 3, 4 decades down the road. And I think the way we fulfill that promise most directly is we don't do anything for the sake of a sales, a top line number. We have to meet our return criteria. It has to make sense from an equity shareholder's perspective. We're making money for our shareholders, but making money adds to our capital base, which protects policyholders. So everything has to make economic sense. But within that context, we do want to grow. We want to serve more policyholders. We want to gain greater market share. But it's got to be with the same level of discipline and capital allocation and risk control with which we've built our business to date. So that's fundamental. Nothing is going to change in the way that we operate. But we're starting to think about, okay, you mentioned it earlier, Jeremy, our industry's doubled, but it's still not nearly big enough for the need. And how can we work with people who we compete against every day? We have a shared purpose, which is this should be a much bigger industry. The annuity industry should be much bigger than it is. And how do we do that?
Right.
The consumer can buy a CD like super easy, right? Is it as easy to buy our product? The answer is no. And maybe it'll never be as simple because it's a contract, right? It's not a bank deposit, it's a contract. But there's a lot of things that I think we can do to make it much closer to that experience. So I think putting ourselves in the shoes of the consumer and saying what would make this process easier, putting ourselves in the shoes of the agent and saying what would it make it easier for him to deliver this product or her to the consumer. I think those are the ways that we need to go when we think about strategic growth, not only for Athene, but for our industry as a whole.
Yeah. So how do you even do that? I mean, right? Because I can go literally down the street. I can go to the bank. I can buy anything over there. And it does seem like a seamless process. And then within, if not days, the same day, money's being moved and it's happening. So like, what can the industry do better, or from your seat and having conversations with others, like how does the industry modernize our space similar to what the competition's doing?
There's obviously more to be done, but I would say it wasn't that many years ago when we were all shuffling paper.
Yeah, that's true.
And so we've done a lot. We haven't done enough. Athene was proud to have partnered with IRI to be the first carrier on paperless replacements last year for 1035 exchanges. That took the experience down from 18 to 21 days to 24 to 48 hours. That's huge improvement. We're working on real-time producer training notifications. We think that before the end of this year, we'll have implemented the IRI's API standard for real-time pending application status. We're working on money acceptance solutions. So there's various pieces of it that you've intimated that we all need to do better on. And I think the sum of all of them will improve the experience and help expand the size of the industry, because people need our products. They need what we have to offer. And we need to give it to them where they, kind of where they are. We all live in the Amazon, let's deliver tomorrow world. And we need to respond to that. It'll probably take longer than any of us would like, but I know we are working on it real time, and I know other companies are too.
Yeah, the world of instant gratification. Just it's good though. It pushes us. Are you
It pushes us in the right way.
so do you see us actually getting there though? Do you see us getting to that spot in the industry where there could be a moment? And the IR, by the way, the IRI, the replacement, I don't know. I know there's probably politics that go into it, but every company should be doing that.
Every company should
That
be.
is
Well,
amazing.
you need to have the systems in back office that can handle it, right?
Sure.
And that's a limitation for some people. It was not for us. But yeah, that should be everyone. And I think, I think one of the forces driving that more than anything else are agents, right? Right? Because they see what happens when you deal with somebody that's on it, and they see what happens when you deal with somebody that's not on it. And that experience couldn't be different, right?
Yeah. It doesn't just win business more, but it's the customer thinks it works that way. Like you were saying. They think, well, if it's approved, why is the money not moving? What's going on here? And then it just there's so many other things that make the agent or the advisor, they don't want to look like they have egg on their face. So, it's just it makes sense.
There are limitations, Jeremy, which is, at the end of the day, insurance is a contract. It's not a security.
Yeah.
So I think we got to push as close to the edge as we can and still recognize that it's a contract. But I think there's still plenty of room to go to make this a better user experience than they get today.
Couldn't agree more. And I think that would be amazing on all parties. The whole industry gets a win if we can get down to that type of processing of paperwork, but also getting policies issued, transparency. What else? What else do you think for the industry? Like, what's around the corner, or something that from your seat, is there something that the industry as a whole? What's next for Athene? What do you think the industry? Is there something that's coming that we should be looking at?
One of the things that we've been spending time on the last couple of years is that became viable with Secure Act 2.0 is getting annuities into DC plans. It's really difficult because of a lot of things. You need to win over the plan sponsor, the corporate that has the 401k. You need to win over their advisors. You need to work with the record keepers. There's technology involved. It probably fits best into a target date fund. So we're not in that ecosphere. So we need to, find a target date fund partner.
Mm-hmm.
But we've been working on that. We have a business now called Viterra. We bought ARS, renamed it Viterra. We're having some reasonable success. We think we have a product construct that is superior. There are other names like BlackRock that have announced large amounts of money into their product, but it's a product that relies on people going into their 401k in their mid-50s and deciding to turn on income.
Yeah.
Don't think many people are going to do that. I mean, that's just not the behavior with how people act relative to their 401k. Our solution is the default option, and you get guaranteed income, and you can take it with you. You can take your money out of the 401k and have the guaranteed income travel with you. We think that's a logical extension of how DC plans have changed over time. Like when DC plans first started, the companies basically said, here, it's all you figure it out. And across time, DC plans have matured, right? I mean, most employers now auto enroll you. They also auto escalate you, like they increase your contribution over time. You can think about a target date fund as auto allocation. And so our of having guaranteed income in that default option is like, okay, it's auto income. At any step in that process, a participant can opt out, but you are defaulted in, you can opt out. We think that's a superior product construct. Got to prove it in the market. It's for pretty early days. And, target date funds themselves took about a decade to get much adoption. I hope it's a lot faster for guaranteed income going into DC plans. But, everyone's got different estimates, but they're all north of 10 trillion of savings in DC plans. So it's a pretty big target market. That's one of the things we're focused on. We've had a lot more focus on RILA this year. I mean, you mentioned, and we are the largest seller of annuities, but we're just outside the top 10 in RILA. We don't think that should be the case. It's the first registered product for Athene. So we're competing on the turf of our variable annuity peers. And in a space, the broker-dealer market, where we're newer, our relationships there are newer. So newer relationships with a registered product. But that's something we put a lot of effort into this year. And we've already sold more this year than we did all of last year. So making some good progress there.
As a financial professional, you work hard to ensure income for your clients over their lifetime. At Athene, we work equally hard to offer you annuity products that will allow their retirement dreams to blossom. Let's put Athene annuities to work. Let's make retirement remarkable.
Going back to which y'all do a really good job. I will say this as a just a student of the industry itself. On your website alone, just the educational topics, the articles. I mean, the education that you provide for not just advisors, but also for advisors to leverage to understand the products themselves, the tools to help the customer with education. I think you guys do a really good job of doing that. And, I think that's where the industry could continue to go back to what you said, just push a little more to help educate the public around why people are purchasing annuities and why, and to use your words, annuities, they should be a lot bigger industry than they are. So I think it starts with education.
I 100% agree. We're investing in our educational materials on our website all the time. I think it's hugely important. Sometimes the knock on our industry is, gee, they're complex products, but they fulfill, the marketing story is fairly straightforward, right? Principal protection, tax deferral, lifetime income. Those attributes, as you said, when sometimes when people, they ask about annuities, it gets one response, but when you give them the attributes of what the product can actually deliver, it scores off the charts because that's what people actually need. Mm-hmm. And so I think this concept, and when people say, well, it has to be agent advised, I think that's a good thing.
Yeah.
I think people should have agents. I think people should have total financial plans and an annuity and longevity protection inside that advised total financial plan. 100%. That's what we want.
Couldn't agree more. As we are wrapping up here, are there any final thoughts or words of wisdom from the CEO of Athene Holdings?
I appreciate the opportunity to speak with you today, Jeremy. I don't know that I have additional words of wisdom. Let's all go out and grow our industry together.
Couldn't agree more. Well, thank you, Grant, for your time for today. And also thank you to the listener for tuning into this week's episode of the Advisor Mentorship Podcast. Be sure to subscribe on your favorite listening device to Jeremy Hauser AMP on YouTube, and also subscribe and connect with us on LinkedIn at Jeremy Hauser. And remember, as you share this episode with a friend and a colleague in a world full of betas, be an alpha.
Guarantees provided by annuities are subject to the financial strength and claims paying ability of the issuing insurance company. Under current tax law, the Internal Revenue Code already provides tax deferral to qualified money, so there is no additional tax benefit obtained by funding a qualified contract, such as an IRA. With an annuity, consider the other benefits provided by an annuity, such as lifetime income and a death benefit. This presentation does not constitute an offer to sell or the solicitation of an offer to buy any security, product, or service, including interests in any investment managed by Apollo Global Management, Inc., Athene Holding Limited, or any of their respective affiliates collectively. The company. This presentation contains the opinions, views, or beliefs of past and present company employees. Other past or present company employees may not necessarily share the same opinions, views, or beliefs about the company as those expressed in this presentation. This presentation is not intended to constitute a solicitation of any insurance policy or contract or application therefore. This presentation is for informational purposes only and does not constitute investment, legal, tax, or other professional advice. The company makes no representation or warranty, expressed or implied, with respect to the accuracy, reasonableness, or completeness of any of the statements made during this presentation, including, but not limited to, statements obtained from third parties. Opinions, estimates, and projections constitute the current judgment of the speaker as of the date indicated and are subject to change at any time without notice. The company does not have any responsibility to update this presentation to account for such changes. There can be no assurance that any trends discussed during this presentation will continue. Certain statements made throughout this presentation may be forward-looking in nature. Due to various risks and uncertainties, actual events or results may differ materially from those reflected or contemplated in such forward-looking information. As such, undue reliance should not be placed on such statements. Forward-looking statements may be identified by the use of terminology including, but not limited to, may, will, should, expect, anticipate, target, project, estimate, intend, continue or believe, or the negatives thereof or other variations thereon or comparable terminology. Past performance is not indicative of future results. This presentation may contain trademarks or brand names of other companies, which the company does not own and uses solely for identification purposes. The company is not endorsed or sponsored by or affiliated with these companies in any way. Any use of copyrighted material in this presentation, not owned by the company, is pursuant to Section 107 of the Copyright Act. All rights in this presentation are reserved to their respective copyright owners. This presentation is not directed to and should not be relied upon by any person in any jurisdiction where its distribution or use would be contrary to applicable law or regulation. This presentation may not be reproduced or modified in whole or in part without the express consent of the company. Notwithstanding the foregoing, nothing herein is intended to impede an individual from communicating directly with the U.S. Securities and Exchange Commission or other regulatory agency about a possible securities law violation